What's up, guys? It's your boy Samuel Tochi, and welcome back to my YouTube channel. In today's video, I'm going to be showing you people a swing trading strategy that has 90% win rate. Yeah, surprise! A swing trading strategy that has 90% win rate. Yeah, it's good to day trade, but why they trade if truly you could have a strategy that could give you good profits in a long period of time? Yeah, it doesn't happen. Why I say it's not a day trading strategy is because it doesn't happen every day. You understand? It takes time, but at the same time, you could also replicate it in the smaller time frame and still do the same thing because it works on all time frame, but has a bigger chance of high probability when it comes to using it in a bigger time frame. Yeah. So with that being said, let's head straight to today's video. So before we get started, I want to show you people the way formats gold moves in. I always try as much as possible to keep showing you people the way format gold moves in. Let's say we are in an uptrend, gold do create higher high, higher lows, higher high, higher lows. Yeah, see something like this, and also applicable in a downtrend where it creates lower low, lower highs, and lower low, lower highs, lower low, and so on. And the second pattern also that gold moves in, it's something like this. I will explain. Okay, let me explain. Comes down. This in an uptrend, it goes up, comes back to retest this level here, change the previous resistance to support. Then this time around, it doesn't break beyond this level. It comes back here, comes down here to retest this level again, making it like a double bottom. Then there's a higher probability that the second move here is going to break push beyond this part. So just hold these patterns very tightly. Let me do the opposite too. Let's say in a downtrend, it goes down, comes up, goes down again, comes up to retest this level here. But this time around does not break this level, goes up again, and you understand, comes here to create a double um like an M formation here, a double top here, then there is a higher probability that it's going to push beyond this level now. Now, this let me do one more example. Another way format it moves. This one happens mostly when it's the trend is about to change. Let's say in an uptrend, it goes up, comes down to create, goes up, break this level, comes down to retest this level, goes up, doesn't break this level, come down, goes up, start consolidating. You understand? So this is when the market starts changing. Once it breaks this low, then it's changing. This one happens mostly. So if you should use your box here and draw these levels here, you see here in this uptrend here, the market changed the previous resistance here to support. Also did the same thing here. Change the previous resistance to support. Also here, previous support to resistance in a downtrend. Previous support to resistance here. And here too, previous previous resistance to support. It came back, fell to break this level here, this resistance here. It fell to break it here, came down back. So as it starts going up, know that the second move here, the second move is most likely going to break this level. But at the same time, yes, our first TP, then our second TP, depending on what we see from way back, you understand, we always look back. So same thing also on the downtrend, previous support to resistance, failed to break the high, the lowest point here, went back to retest this level again. The higher probability is that it's going to break. So remember, now also when the trend is about to change, it starts consolidating, failed to break the highest points in an uptrend, and also the same thing in a downtrend. So just try to understand this pattern. Just try to understand this pattern, because it's look like you should work more on working on your eyes to be able to identify these kinds of pattern whenever they happen on the chart. So now, since it's a swing trading strategy, let's head straight to the chart, and I'll show you what it looks like in the main chart. Okay, so this is a 4-hour time frame. It's a swing strategy, as I said. So this is a 4-hour time frame, and sometimes I take trade off on the 1-hour time frame using if I'm to swing. Yeah, so we remember in a swing, if in the swing strategy we use the daily time frame to see our main trend, 4 hours current trend, and the 1 hour as our entry time frame. So let's say yeah, let me go back. Let me start from this point here. So I'm just going to be using this wave pattern only on this. I'm not putting trend lines, I'm not putting other confluences. But if you should add other confluences, it's going to give you a very high rate. So I'm just showing you what it looks like nakedly. So let's say this market now, you can see from here, clearly you could see it's a downtrend. Clearly, you could see it started moving down, went up, move down, went up, move down. You understand? It's just moving in such pattern. Now, if like if I should say, okay, can you show me where those zones are from what I showed you? I call it F and R. Can you show me the F and R? Yeah, you might not even see it coming. So now let me show you one. Yeah, it's very simple. There, when the market started moving down, went up, moved down. This is the lowest point it created, right? Went up, then broke that level. So this is the level here it created. Well, now do you see what happened? The market went back. Even when it did this one, came back, you will be like, I've missed this trade. It didn't go straight up to this place. This way, patient plays a vital role. Now you see, it came down, still went way up now. This is where we would have short now, because it changed the what? The previous support changed now to resistance. And you see the candlestick reactions here, multiple candlesticks reactions, rejection here. So stop loss way up above the box, and TP should be around this level here, the lowest points where this market came. And you see 1:5.6 risk to reward. Gone. Now, apart from this here, remember the second pattern too, which is this level. So this level now is vital. If you should push it way forward, you see that the market failed to break this. Let me say, this is the lowest point the market went to, right? This is the lowest point here. You should push it forward. This is the lowest point. So the market failed to break this level now and turn it to resistance before falling. This previous support here, the market failed to break it and turn it to resistance before falling. So what did I say? If the market failed to break that level, if the market fails to break that level and goes back up to retest, then the second touch is most likely going to move way down. Let me show you what I mean. I'm trying to make this practical. Now, this is I've shown you this pattern now in a downtrend, this pattern. So now I want to show you this pattern now, what it looks like in a downtrend. Now, let me draw something else and show you. I forgot to show you one wave pattern. So let me just put it now real quick. So now this is another pattern here that gold moves in. All this are in my ebook. It came down here. So if gold fails to touch this level, if it fails to retest from this level as normal, then the next level it's coming to is probably this level. It's coming straight to this level, which means your TP shouldn't be beyond this level. Shouldn't be beyond this level. That is if it fails to retrace from here. Not like this one that it's retraced but still failed to break before shooting. This level now, it's failed to change the low here. to resistance before falling. Instead, it went straight up to this level here. So this is another pattern that do happens on gold, yeah, in a downtrend. So let's you head straight to our chart now. Let me show you what it looks like. Now, this is it now. You see, when the market broke here, it changes first to resistance before dropping now and failed to break this level and change it to resistance. But instead of stopping at this level, it went back to do what? Retest another level. And this is the level here. You could see what happened there. See what happened there. So the market went back now to retest this level here. It failed to retest from this level and break this level. Instead, it did what? Failed to retest from this level. It broke it. Now you see the next level it went to. From the second pattern I showed you, I just put it now. See where it's retraced from. So from there now, I should be expecting a sell. And if it's since, let me say for instance, on norms from the strategy we used, we were supposed to short once it comes back to this level, right? We were supposed to short using the patterns I showed you. So we were supposed to charge. And this second one was supposed to break it way back from the pattern I showed you. So you see that one hit our stop loss, which is a normal something, a normal thing here, because we don't expect it to be 100%. I only said 90%. Yeah. So now that is the first loss here from this strategy. So from this level now, our TP above this box, you could see the candlesticks there. It created a doji there at that point there. Yeah, even did a bullish engulfing pattern, but still it didn't fall. So our TP was supposed to be at this box here, this level. So that's where our TP is. You see, a good one is to 5 risk to reward. Now let's say we reached $100. We had an account of $10,000. We reached 100 to get at this point. This trade means this one is to 5 risk to reward means that $100 you're risking it here to get 500. $500. Year two, that was a good one, is to 8 risk to reward. We were risking 100 here. So as it went against us, it means we are losing 100. Remember, we made 500 here, so we are only losing 100 here. Here again, we are risking 100 now to get 500 again. So we made back our profit plus $400 on top again. So this moves now straight to another level. So now So now let's map out the next zone to see what happened. So when the market hit our TP, yeah, what we'll be doing is to map out the next zone, the next level, yeah. So the next level at this point here, it's here. If you look, let me bring the horizontal line, horizontal ray. You see here, you see how the market reacted at those levels when it comes to hit here, hit here, hit here, hit here. Even if you should push it way back, you will see how it reacted at those levels there. Its body. You see the reactions. Apart from the ones that happen on the zone, you can see here. So now, those are the, like now, even without putting it, let me remove it. Let me remove it so as not to confuse everyone. So even without removing, let's choose our normal F1 out. Let me push this one way back to this level. So now, where is the lowest point the market went to before shooting up? Yeah, what was the lowest point where the market moved to? Because overall it's still in a downtrend, so we should look back to see the lowest level where the market went to before shooting this going up, way up here before falling. So the lowest point here, you could see when the market shot up, it came down, created a low here, went up again, created another low here. So this is the lowest point here. I'll map it out. That's why I said you should work your eyes more to see this thing happen. You see it went up, came down to create here before shooting up now, came way down. So this is the lowest point here. I should be anticipating here, a touch here. So I would be expecting to short from this level now. So a short here. My stop loss above the box as usual. And my TP now, where should my TP be? Okay, this is after the market broke this level. This is the lowest point it came to, so my TP should be somewhere there. the lowest point there. So this is a 1:3 trade, 1:3 risk reward trade. Fine. So now when the market broke this level, we've had 3 successful trades so far. So when the market broke this level, where is the lowest point again? Just keep marking the zones, the F1 zones. This is the lowest point here. So we were expecting to sell off this level since it's still in the downtrend. But what did the market do? It fell to retrace from this level, right? So now, where is the next level we should be waiting for? Which is what? The next zone here is here. This next zone. And from the second pattern I showed you guys, I said if it fails to retrace from here and comes back to test the next zone there, then it's going to shoot way down than this. So let me remove it from this place now and take it to this next zone here. Although this one, it didn't really enter it, it just touched the peak of it, but still fine. Let's still put a short position. So if you should go short from this level now, we should go short from this level. Where should we put our stop? Because we are expecting this one to go way down. So if I should reduce the chart, oh sorry, I should reduce the chart. I should know where my stop loss should, my TP should be, all at levels. I could, my first TP should be way here, the lowest point here. Second, let me look for another zone here. We are looking back now. I'm looking the lows. So, and those are the levels. So you see, those are the levels already. So first CP should be here, the lowest point. Second CP, third CP. That's fine for me. 3 CP, or I could even stop here. But let's say we hold to this point. So you see the 1:8 risk to reward trade. 1:8 risk to reward. So now that's it for this pattern now. Okay, so now you see what the market started doing from here. It started consolidating. So let me remove all these lines first so as to make it okay. So far I've had some several successful trade. Let's see what happens here. Now, if you should draw this point now where it started consolidating from the highest point there to the lowest point here where it matters, we adjust it to fit. So you see the consolidation there where the market started consolidating, and when it breaks, it changed that level, which is the lowest point here. It changed it to what now? To change this level to resistance. Then from there we should go for a sell again. That's the lowest point, the recent low, not the overall low. I failed to tell you guys the recent low, not the overall low. So above the box again, the F1 box. Now our stop loss, sorry, our TP, where should it be? Still look back again. Where is the lowest point the market went to? So I carry the tools. This is a low, yeah. There's a low here, and from this ones too, there is a low too. All these levels too are very sensitive. So let me put it from the lowest point here. So those are the TP levels too. If you should adjust it too, you could see what happened. Let me refresh. So you see what happened after the market broke. It changed apples to resistance before dropping. Let me reduce this. Now where is the recent low again? The market created. You see here the lowest point here, lowest points, and the market, sorry, came back to retest that level before dropping again. Same thing again happened, and when it started changing, you see it started breaking those levels. Started breaking those levels. But at the same time, you see weight now comes back to retest this level now. The recent zones here. This way the market came back to touch before dropping. So just master, like, I don't want to make this video bulky. Just try to master these patterns. Try to work your eyes to keep seeing this thing happen in the chart here. And again, I didn't say it's 100% strategy. It's a 90%. It has a 90% win rate. Why? Because the risk to reward is way high. You understand? It's way bigger than this. And if you should work your stop loss well, like master the strategy and work your stop loss well, you will see that your risk to reward is will always be bigger, way bigger than 1:10, 1:15, and so on and so forth. So that's it, guys, on today's video. You were to hit the subscribe button and turn on post notification to get notified whenever I drop forex related videos like this. And see you then, guys. See you guys on my next video.